So I had a conversation last week that should terrify every SAP FICO or FICO consultant watching this. A CFO at a major Fortune 500 company asked me to help him build an internal finance team for a major S/4HANA migration. So it was an enterprise-wide digital transformation across 12 countries, very complex intercompany structure, multi-million dollar ERP implementation, and he wanted to build a tag team who would guide the implementation. I casually asked him, I said, how many FICO consultants he wanted? He said, none. Not zero budget, zero interest. And he didn't want the FICO consultants. So I knew exactly what he meant. I probed further. I asked him, what do you need? And so he said he wanted a central finance architect, a group reporting specialist, a SAC planning expert, a tax automation consultant who understood tax implications, and a treasury specialist who could set up multi-bank connectivity across 12 countries. 5 roles, and not one of them had FICO in the title. I'm Noel DCosta. I've been implementing ERP software for the last 25 years across SAP, across Oracle and Microsoft. More than 100 organizations, government, defense, banking, Fortune 500 manufacturing, over $700 million in project value. And I've worked with every major system integrator, whether it be Deloitte, Accenture, EY, the Big Four, either as a client or as a consultant. And this is the first time in my career I'm actually seeing CIOs and CFOs actually avoid the word FICO consultants in their hiring specs. Now, that's not a trend, that's a structural shift in enterprise resource planning. So whether you're a CIO, planning your next digital transformation investment, or a consultant planning the next 5 years, you need to understand what's replacing generic FICO. Because the ROI conversation around SAP Finance has fundamentally changed. So 5 niche areas. What is SAP doing with each one? What are the real hurdles? And why are consultants who combine 2 or more skills are the ones commanding around $200 to $300 an hour? So 5 areas, and I'll tell you right now. So area number 4 is the most recession-proof SAP skill on the planet. So stay for that one because you won't regret it. So area number 1 is central finance, right? There may be around 500 consultants globally who can implement this properly. And the ones who can, they don't apply for jobs, jobs apply for them. Now, this is probably the most underrated capability in the entire SAP portfolio right now. So here's the problem it solves, right? So most large enterprises don't run one enterprise resource planning system. They run 5, they run 10, sometimes 20. And because all of it is in different countries, in different business units, different ERP implementations. So some of them could be on SAP ECC, some of them are on Oracle, some of them are on legacy platforms that people don't want to touch. Now, in the US, you see this constantly with Fortune 500 companies that grew through acquisitions. So a manufacturing company in Ohio buys a distributor, let's say in Texas, running Oracle, or a supplier in Michigan who's running JD Edwards, and their own plants are running SAP ECC. So the CFO's team spends weeks every quarter trying to pull consolidated numbers across all of these enterprise softwares, right? So you're talking about spreadsheets, VLOOKUPs, manual adjustments. Every big 4 consulting firm has seen this exact scenario. In India, it's the same story, but with the IT services company managing it from the outside. So you'll have TCS, Infosys, Wipro. They're all being asked to solve this problem for their global clients. And the consultants who actually understand central finance, you could probably count them on 2 hands. And central finance really changes the game, right? You deploy one S/4HANA system as your central finance hub. It pulls all the financial postings from all the source systems in real time, whether it be in ECC, Oracle, whatever. The data lands in the universal journal. So you have just one version of the truth. You don't have spreadsheet reconciliation anymore. So if I go to what's new in central finance, SAP just released the enhanced central finance capability in the February 2026 update. What it did was it improved the GL posting visibility big time. You have a better integration with Taulia for the working capital optimization. And then the management accounting interface now supports online replication for cost postings. Now, what does that mean? That means your cost allocations in the source system flows to central finance in real time instead of batch. So in the old way, BPC was always used for consolidation, right? You had separate systems, you had separate data models, reconciliation nightmares, plenty of data extracts, manual adjustments, waiting for period end close before you could even start. In the new world, all of that changes, right? So, what are the hurdles that you would have? So, this is not a plug and play system. You need harmonized master data across all the source systems, right? The chart of accounts needs to be mapped. The profit centers need to be aligned. So, if your source system has a really inconsistent GL structures, you're looking at a serious data harmonization efforts even before you start with the technical setup. Now, here's the multi skill angle. So, the consultants killing it in central finance right now, they're not really pure FICO people. They're the ones who understand data migration. They understand integration architecture on BTP. They understand consolidation accounting. So, central finance plus group reporting as a combined skill, that's a very rare profile and it commands premium rates. Now, stay with me here because the next one pairs with central finance to create a skill combination that barely exists in the market. And the people who really have it are printing money. I'm talking about the second area, which is group reporting, which is a different, skill set entirely. Group reporting is SAP's replacement for BPC consolidation. So it runs natively within S/4HANA. So there's no separate system, there's no separate database. Your consolidation process uses the same universal journal that your operational finance uses. So in the old world, you closed your books in ECC, you extracted the data to BPC, and then you ran your consolidation. And then if something didn't tie, you went back to the source system, you fixed it, you re-extracted it and reconsolidated. Now that loop could take days and sometimes it could take even weeks, depending on the complex group structures. Now with group reporting, the data is already there, right? So there's real time. You close your entities, you run your intercompany elimination, you do your currency translation, your minority interest calculation all on the same data set. So there's no extracts, there's no reconciliation gaps. And the February 2026 release added a universal parallel accounting support, which is pretty much a big deal for multinational companies reporting under, say, US GAAP and IFRS simultaneously. Or it could be even for Indian subsidiaries of US parents that needed to maintain books both on the Indian AS and the parents' GAAP. So there are two accounting standards, one system and duplicate postings. It could also be used even for IPSIS and IFRS for public sector. So what are the hurdles? Now this requires deep knowledge of consolidation accounting, intercompany matching. It requires the equity method, proportional consolidation, purchase price allocation. Now this isn't really SAP configuration work. This is accounting work. So you need people who understand IFRS or US GAAP consolidation rules and can translate them into a system design. Now, most FICO consultants don't have that. Most CPAs don't know SAP. And so the people in the middle are rare and they're charging accordingly. So if you're a consultant in India looking at this, here's your opportunity. US companies need people who can do group reporting work at competitive rates. So if you can pair your FICO configuration skills with consolidation accounting knowledge, you can serve that market from Bangalore or Hyderabad and still bill at rates that would make most Indian SAP consultants uncomfortable. So let's talk about area number three, which is SAP Analytics Cloud. So if you're still using BPC for planning, I need you to really listen to this next one because SAP has made its direction very clear and a lot of companies are about to get caught flat footed. So SAC is where SAP's finance reporting and planning is headed, right? Full stop. In ECC, you had BW for reporting, BPC for budgeting, and Excel extracts everywhere. The CFO asks for a variance analysis and somebody spends 2 days building it. Now, SAC embedded in S/4HANA changes this completely. So you have real-time dashboards pulling data directly from the Universal Journal. You have predictive forecasting, what-if scenario planning. And with Joule integration, users can ask financial questions in natural language and they can get their answers on the spot. Now, the feature that most people miss is SAC planning. It's not just dashboards, it's a full planning and budgeting platform. So you could do your annual budgets, your rolling forecasts, your driver based planning, all connected to your actuals in S4HANA in real time. So there's no more, uploading actuals into BPC at the month end. They're just there. Now, in the old way, BPC was powerful but painful. Different versions. You had CPAC, embedded classic. You had every customer had a different flavor. Migrations between versions were a project in themselves. And the interface frustrated everyone except the power users, had spent years mastering it. So let's talk about the hurdles. SAC is cloud only. So if your organization has data residency requirements, there's a conversation you need to have on day one. So for US companies in regulated industries like healthcare, financial services, defense, cloud data sovereignty is a board level discussion. Your existing BPC planning logic just doesn't migrate over, right? It needs to be redesigned. The skill set is different. SAC consultants need to understand data modeling, story building, planning sequences, and integration, let's say, with S4HANA. Now, this isn't a FICO skill, it's a new discipline. Now, if you look at the multi-skill play here, SAC plus FICO, if you understand financial reporting requirements and you can build SAC stories and planning models, you're bridging a gap that most organizations can't fill internally. Their finance team know what they want, their IT team knows the tool, but nobody speaks both the languages, and that's you. So this is what it changes in the real world. So remember at the beginning I said area number 4 is the one nobody sees coming? Well, here it is. It's all about tax automation and e-invoicing. Now, this one flies completely under the radar, and it shouldn't because it's not optional, it's mandatory, and it's the most recession-proof SAP skill on the planet. So governments don't stop collecting taxes during a downturn. And every country is moving towards mandatory electronic invoicing. So Saudi Arabia has ZATCA phase 2. The UAE has just implemented corporate tax. India has got GST e-invoicing through the NIC portal. Then you have Brazil, you have Mexico, Italy, Poland. All of them have got e-invoicing requirements. You have the EU who's rolling out VIDA and VAT in the digital age, which will require real-time digital reporting across all the member states. In the US, it's a slightly different flavor, but the same direction, right? So the IRS is modernizing. The states are tightening sales tax compliance, and SOX audit requirements are getting more granular around automated controls and governance. So, what does that mean for SAP? So, every single S4HANA system needs a tax engine integration, right? It requires compliance reporting, digital signature capabilities, real time invoice validation with government portals. So, what's SAP's approach? So, SAP's document and reporting compliance handles the e invoicing. It handles the e-delivery, the digital tax reporting for multiple countries, and it sits on BTP and it integrates with S4HANA. So SAP also partners with third-party tax engines like Vertex and Sovos for complex tax calculation. Now, in the old world, in ECC, tax was always on the back burner, right? You configured your tax codes, you ran your periodic reports, and then you filed returns manually or through some bolt-on tool. Now, compliance was basically a quarterly headache and a nightmare for companies, and they didn't really know what to do. So, what are the hurdles? So, the tax automation requires a unique combination of skills. You need somebody who understands local tax laws, the technical integration with government platforms, and the SAP configuration to make it work. So, in Saudi Arabia, the ZATCA phase 2 with a API based invoice clearance is a massive project for every company operating over there. In India, integrating GST e-invoicing with SAP's required middleware, the API connections to the NIC portal and changes to the billing process that most companies weren't ready for. Now, if you look at the multi-skill angle, the tax plus FICO plus integration, if you understand tax law, even in one major market, and can configure the SAP tax engine, and can handle the entire BTP integration layer, you become irreplaceable for any global rollout. And I know consultants with this combination who have booked solid for 3 years straight with zero bench time. So the last one, area number 5, and this is pretty much the loneliest niche in SAP. And I know treasury consultants who've never had a single day on bench in 5 years, not one day. And that tells you something about the supply and the demand situation. So Treasury has always been a niche within the SAP Finance. And S4HANA turned it into something far more powerful. So the old SAP Treasury in ECC was functional, but it was kind of limited in what it could do. So cash management was really basic, and the bank communication required middleware like the Swift Alliance Lite. Now, liquidity forecasting was mostly manual, and most US companies ran separate treasury management systems like Kariba or the FIS, alongside with SAP. Now, the total cost of ownership was high because you were running, two different platforms, and managed services contracts for treasury were pretty expensive and disconnected from the core ERP. When SAP S4HANA, SAP rebuilt the treasury from the ground up. So you have the new cash management that uses the Universal Journal for real time cash positioning. You have the bank account management that gives you a centralized view across your entire organization. You have advanced payment management, which handles really complex payment factory scenarios. And the latest update introduced agentic automation for treasury operations. So you have AI handling the routine payment processing and exception management, right? Now, the game changer. So, SAP multi bank connectivity. MBC connects your S4HANA system directly to your banks. So, there's no need for a middleware. There's no more Swift installations. It's direct, it's secure, it's a cloud based bank communication. So, the payment files go out, the bank statements come in, and it's all automated, right? For US companies dealing with ACH, FedWire, and Swift payments across multiple banking partners, this simplifies the landscape dramatically. Now, let's talk about the hurdles, right? Treasury is deeply specialized. It talks about financial instruments, hedge accounting under ASC 815 and IFRS 9. You talk about cash pooling, in house banking, payment factories, cross border payments with OFAC screening. Most FICO consultants have never touched this. And the treasury teams are really small, 3 to 5 people. So convincing them to change their processes is like running a project for years in itself. But here's the opportunity. So you have treasury plus FICO plus bank integration. That triple combination barely exists in the market. So if you have it, you don't compete for roles, roles compete for you. So let me pull all of this together for you. So 5 niche areas, all growing very fast, all critical, but short on talent. Now, if you notice the pattern, every area I mentioned rewards consultants who have more than one skill. So it could be central finance plus group reporting, it could be SAC plus FICO, or it could be tax plus integration, or treasury plus bank connectivity. So the single skill FICO consultant is becoming a commodity. The multi skill specialist is becoming a premium. So if you're a customer, whether you're a CIO or a CFO, the message is really clear. SAP Finance isn't about GL and cost centers anymore. The enterprise platform has expanded into consolidation, planning, tax automation, and treasury in ways that fundamentally change how your finance team operates. But getting there from ECC requires a real S4HANA migration strategy. It requires clean data, it requires the right implementation partner, and people with the right combination of skills. So, if you're a consultant, especially if you're in India or if you're in Europe or in the US, these 5 areas are where the next decade of SAP finance careers will be built. So, stop competing in the crowded FICO pool. Go where the demand is high and the supply is low. So in the next video, I'm doing the same breakdown, but for the SAP supply chain. So what's changed, what's new, how to get there, and what are the hurdles? Subscribe so that you don't miss it. And drop a comment which of these 5 areas interest you the most, and tell me your current skill set. And I'll tell you which combination makes the most sense for you, for your profile, basically. And I read every comment as you would have seen in all my other videos. So I'm Noel Benjamin DeCosta. Thank you for watching, and I'll see you in the next one.